Okay, so 7.2 is all about preparing a balance sheet. We don't have any ratios that we're going to use for this. There are definitely ratios out there that you would use for this. Definitely a debt to income ratio or debt to asset ratio, return on assets, stuff like that we'll look at in a separate kind of project. But for the most part, just to go through and prepare a balance sheet that includes our information from the worksheet, assets, liabilities, and owner's equity. All right. Which, if you remember from the worksheet, when we pulled over net income, it became owner's equity, and that became the missing part of the equation. So on our worksheet, we might have had assets balanced minus any drawing or withdrawals that the business owner had made to be 5,387, with liabilities and the original capital being a total of 2,225. But then there was those two numbers don't equal. But then when we added in net income, that became the remaining or current owner's equity. And then all of a sudden, our debits equaled our credits, assets equals liabilities plus owner's equity, essentially. So we're going to do the same thing on this that we had done before. We're going to prepare a different financial statement, balance sheet. And remember, the big difference between an income statement and a balance sheet is that an income statement is for a specified period of time. That would be for like the year of, or the 1 month of April 1 to April 30th. What were your revenues in April minus your expenses in April? Were you profitable in April? Okay. Or a lot of times you'll see this per the year. Were you profitable in 2020 or not? What were the revenues, total revenues in 2020 minus total expenses of 2020? Gives you your net income. The balance sheet, on the other hand, is just continuous. It starts when the business starts and it just keeps going forever because it's assumed that the business is always going to be in business. Even if Delgado himself retires, sells his business, whatever, goes out of business, he would close the business out. The balance sheet is set up to track it and provide it as like a snapshot at any one point in time. It's not tracking a total period of time. It's a period of time. It's like a photograph versus a movie, right? So balance sheet would be like a photograph. You could look at it at the end of the year. You could look at it as of today, as of the beginning of the year, or whatever. And it's always going to show you a good snapshot of the health of the business. The big thing that we'll look at, assets on the left, liabilities and owner's equity on the right. And we have to make sure that assets, just like our accounting equation always said, assets equals liabilities plus owner's equity. So we're always going to try to get to the point where those two things equal themselves. So just to go through real quick, we are going to prepare this for, it's a little bigger, all pro painters, balance sheet, the title of the document. And this one, we're going to be looking at this on April 30th. April 30 of 20 whatever. And again, we're not looking at it at like for a specified period of time. We're not looking at it for the first quarter or something like that. We're looking at it as of April 30th. And it's going to include the entire history of the business. All right. This business is 50 years old. This contains 50 years worth of information. All right. The income statement will only include information from the specified period of time that it's taking place in. Okay. So grade that and move on. So balance sheet items, just to do this again real quick. We have cash as an asset, petty cash. Accounts receivables are all assets. Supplies is an asset. Prepaid insurance is an asset. Accounts payables are always liabilities. And then any of these are always the capital, and the drawing accounts are always owner's equity. So then we have all the rest should be neither, because these are all income statement items and we're only worried about the balance sheet. So a quick look there. And then we'll move on to the balance sheet amounts. And if you remember, we have our worksheet up top. And again, just like the income statement, we're going to move amounts over from the balance sheet part. I need to scroll up. Down to the actual balance sheet itself. So, how much in cash did we have? 4,750. Petty cash, $75. Accounts receivables, we have 825 and 715. Supplies, remember we had the adjusted total. It wasn't what we started out with because we used up $140 during the year. So our balance is 110. That's what our supplies should be at, 110. Prepaid insurance, same thing. Total value, debit balance of 320. And we're not even calculating the totals just yet. We're just transferring information over. The two accounts payable for 275 and 490. Dwight Sundin, the owner of All Painters Pro, initially put in $3,500 of capital. And that's all we're going to worry about for now. Oh, what did I mess up? 6,000. Did I mess it up? Capital. Why are my numbers wrong? What's that? Yeah, I don't know how they got that out of there. Capital. Oh, plus the net income, which I think that is where we go. So I had to look at 3,500 plus the net income. No, that's, give me 1 second. $60, 3,500. I will figure this out. Plus 3. All right, so I messed up. My apologies. For that calculation, we have to start with and take like the net. Okay, so it'd first be $3,500 to start, minus 1,200 because that's how much he took out, plus the net income, and that would give us 60. So that number should be 60. I don't think I can change it. 60/30. So we have 3,500 minus 1,200 because started with he put in of his own money 3,500 to the business, took out 1,200, and then end up with net income of 3,730. So that's how we got to the 60/30. All right, and finally we will calculate some totals. So if we add up cash, petty cash, all of our accounts receivable, supplies, and prepaid insurance, that gives us a total of 6,795 total assets. Total liabilities is so 275 plus 490 would be 765. And then the capital of 6030, 6,030. Add those together, should give us the same thing of 6,795. And that should be it. So my apologies for the mistake there, but why don't you guys try to do the on your own part now, and especially that one piece with the example there, and let me know if you have questions or calculate.